All right. Well, week 124 is here. Thank you so much for subscribing here and listening and reading. There's a small group of us here right now, but I promise you this thing's going to be the biggest real estate YouTube channel that exists in Toronto in, let's say, 4 months. How about that? Help me out, share. If you are new here, my name is Ara Memorian. I am a real estate broker. I am managing partner at the Spring Team Real Estate in Toronto. And we operate out of Real Broker, Ontario, which is probably the newest and most awesome real estate brokerage that exists in North America today. So if you're an agent, ask me about that. But today we are here talking about week 124. What has happened in the 124th week since COVID began? March 2020 is when I started tracking this information week by week. I'm going to share my screen shortly so you can see exactly what that looks like. We have got charts on 5 neighborhoods in Toronto that I've been looking at. Urban downtown and surrounding communities, all the way through Lawrence Park, through Rosedale, Birchcliff, Kingston Road up to Highland Creek, a number of communities. That's where most of our clients usually are. That is the markets that I am talking about. So I'm going to share my screen with you real quick so you can kind of see what I am saying here. So if you go to the blog, thespringteam.ca, you click on this blog thing, you're always going to see my most updated blog. Usually around 12 o'clock is when it's there. Then I make this video and put it out there. So, the first part of my blog this week, I go off about some agent that had no idea what they were talking about, trying to tell me that I had a listing that was overpriced, but you can read that later. The main thing I wanted to focus on this week is the demand for rentals has never been as strong as it is today. The rental market is going to keep urban Toronto's real estate prices from doing too much fluctuating, especially for condos, but also for houses in the coming, I guess, year or so as we head into the inevitable recession that is ahead of us. So the one thing that I want to focus on is, number one, again, I'm going to repeat this, you cannot day trade real estate. Real estate is an investment. Of course, inevitably it is an investment. It's what is able to provide a lot of people with a very comfortable retirement they otherwise would not have had they not owned that piece of real estate. I think it's very difficult to dispute that specific fact, which is why I'm constantly driving home the message that long-term investments always will pay off. So since the beginning of March, I have been tracking our urban markets. And when I'm talking about an urban market, I'm talking about that area, let's say it's like the Danforth, Bloor, Etobicoke to the beaches down to the lake, that big area right there. And you can see kind of where we peaked out in January and February with almost a $2 million average price. But things have kind of come back down to earth over here, with some properties trading for less than they were in the first quarter, while some aren't. It's very neighborhood specific. And you can see condos actually being relatively stable here and not as affected as houses, which is a huge surprise to a lot of people. Like, I just got off the phone with the Toronto Star doing an interview, and the interviewer was surprised to hear that condo supply, if we look over here, has actually come down from almost 2,000 units just 4 weeks ago to 1,810 active listings. With houses, we were at 640 houses available for sale about 4 weeks ago. Now we're down to 564. So, like, what does all that really mean? All that really means is that when people aren't getting the prices that they want, they're not dropping their pants on the price and taking whatever they can get. What we are seeing over and over and over again, most cases anyway, if a seller does not get the price that they want, they're just delisting their property and waiting, or they're renting it out. And that's proven in these numbers that I have here that it's an indisputable situation. So again, going back to this document right here, we can clearly see, if you go back to other blog posts, you will see the differences in supply. So when everybody's so focused on talking about average price and how it's down by this percent or down by that percent, it's not a fair indicator of where the market actually is. Because when you drill down into the market, there are far fewer ultra luxury urban properties on the market today than there were back in January, February, even December of 2021. That's a very important distinction that is affecting average prices. When we sold a property like 231 Grace or 166 Lisgar, semi-detached houses for $3 and $4.4 million, this type of property is just not on the market right now. So it's not that that type of $4.4 million property is all of a sudden trading for $3 million, affecting average price like this. So it's very important to take average price, especially when you have such a small data set like this at only 49 sales here, with a grain of salt. There's always a lot more to the story. So it's not like you're buying $2 million houses for $1.5 million all of a sudden. That's not the case. It depends very much on where you're looking and what you're looking for. But the biggest numbers that you should be talking about with your agent, and hopefully that's one of our team members, is how much is on the market in the neighborhood that I'm looking to buy? And what does months of inventory look like? And how long are these properties staying on the market? When you look at numbers like this, the story is much less dramatic. And it's very important for you to be looking long term as well, which is why that day trader mentality makes no sense when it comes to buying real estate. But look, as a buyer in a market today, you have to be very careful and leave a bit of a buffer between what you've been approved for and what you actually buy. You should not be maxing out on that purchase right now. It is not a smart move for you to go to your maximum affordability on your purchase right now. The next 12 to 18 months are going to get more expensive for you. With inflation, it's going to become a problem. And interest rates are going to continue to rise throughout the rest of this year and potentially the early part of 2023. But I think we've talked about this a million times before. When you're in an environment where the Bank of Canada rate is 2% or more, that usually signals a recession, which is why we're fairly confident that the next 12 to 18 months, we're going to be in a recession. But when you're in a recession, there's usually downward pressure on interest rates. So if you can just see past the next 12 months, you will see that there will be a ton of downward pressure on interest rates, and things will come back down to earth where buyers start to step back into the market. So as a buyer, I'm saying now is not the time to max out. Leave a bit of a buffer. And as a seller, if you do not need to sell right now, don't. We don't need you on the market right now. Now is not the time to be testing the market just to see what you can get. That's not what we're here for. That's not the right market to try that in. You will only be shooting yourself in the foot if you do that. So please be very careful and strategic and speak with your agent and make sure that they're just not throwing commission talk at you just to make sure that they get paid. And some agents are out there doing that. And there's some agents that I really want you to be careful about listening to in the various social spaces. A lot of these people are trying to be day traders and timing the market. That's not really how you become a successful buyer in this market, especially if you're looking for a home for yourself. So going back to the blog real quick, I want to show you the blog real quick again. Well, where is it? There it is. So again, so remember, we're not going to be too focused on average price, but if we are, we're going to see that condos are actually holding their own. And right here, even with, so that's another point. Right now, we have houses at 564 active listings, condos at 1,810. Remember, this was almost 100 units more 4 weeks ago, and this was almost 200 units more 4 weeks ago. All of this inventory not piling on, even with sales that are down dramatically. 49 sales when this is usually over 100 in a normal market for houses. 86 condo sales in the urban markets when this is usually at 170 to 220 sales. So even with that decreased sales activity, and I'll talk about where these buyers are going in a second, even with all this decreased sales activity, we still have no listings piling on. And what does that tell me right now? And that tells me here that we do not have a market full of panicked people. If they don't get their price, they pull off the market and they wait, or they rent. Renting right now, there's not a single quality rental that we've been able to keep on the market for more than 24 offers. We get 7 to 10 offers on absolutely every rental we put on the market right now with highly qualified tenants. So landlords, rather than selling your property right now, I would strongly consider renting your property out and locking in 1-year leases right now. Especially if you have a property that's newly built after November 2018, where rent control does not apply. That way you can adjust to the market as the year goes on. But right now there's an amazing opportunity to take advantage of these high rents and depressed prices, especially for some houses. Right here, these houses here, if you can get one that is trading for less than it would have in January and February, and there's a chance that that happens depending on the community that you're looking in. Like it's going to be harder in areas like North Riverdale, which seems to be, relatively protected during times like this. But there are properties that are less than ideal that require just a little bit of work to get up to rental standards. You will be taking money to the bank every single month, and then you can take advantage of the price pop in 18 to 24 months when we dig out or get more comfortable in a lower rate environment. So there's a lot of opportunity out there for you. So the most important thing I'm looking at right now as a buyer, how much is on the market? What are sales looking like? What's months of inventory? Remember, traditionally under 2 months of inventory is a strong seller's market. So we don't have a supply issue. We have a buyer demand, buyer sentiment issue, like we've talked about over and over and over again. And like property selling in 12 days, property selling in 22 days, most places around the world would envy these numbers. So this is more in line with what a normal market would look like. Of course, you've got to be cautious as a buyer and understand you're making the right decision. But you know what, long term, it's really hard to make the wrong decision, especially in Toronto. And some of the other neighborhoods that I look at, we've got the north, Rosedale, Deer Park, Moore Park, all the way up to kind of Lawrence Park, close to the 401. This neighborhood has also been holding steady with the number of listings that it's had. Again, very small amount of data to confirm numbers like this. So always, look at average prices with these tiny data sets with a grain of salt. But again, we've got months of inventory at balance between a seller's and a buyer's market here. Properties at this price point are selling in under 20 days. Like this is not a thing to be crying about right now. Condos here, 207 listings, months of inventory, a little more generous here. But this is a community that has a lot of older buildings, a lot of local downsizers. It's not a typical condo community that's fueled like the urban markets are usually. So, another thing I wanted to make sure we talk about is when you're reading reports and trying to understand data, let's stop the share for a second. It's really important to understand what data set this group or study or article is looking at. Because it's not reasonable to think that the community in Toronto that you're looking to buy in is reacting the same as a rural community in somewhere in Alberta or wherever else that's maybe not as stable as our urban markets. So when you read a report, is it GTA? Is it Canada? Is it 416? Very rarely are you going to find a report that has drilled down like we do, which is why we spend so much time and effort going through this, because it helps you make smarter decisions in the actual markets that you're likely in if you're listening to this. So I'm not really one to be sharing broad data and telling you that properties are worth 20% less today when they're actually not in a lot of cases. So very important to ask where is this data coming from that I'm looking at? So going back to the blog here, this is exactly why we've done this for 124 weeks in a row. Nobody else has done this. You can't get this information anywhere else on any of these communities. It's funny enough, the one neighborhood that actually did add some inventory supply with 51 listings is Leaside, which is historically the most undersupplied community, this entire area, the most undersupplied community in all of Toronto. It has been throughout COVID, that was the theme. This was hovering around 19 to 25 listings before, but even at this range, even with this much inventory, property is still selling. As you can see, one of the lowest months of inventory statistics in all of the areas that we're tracking. Condos are not doing as well, but still, they are still moving in a relatively short amount of time, right? And these numbers also, again, with only 3 sales, you can't really add too much weight to numbers like this. So, what's going to happen in September when the next announcement comes? I'm unsure. Right now, we've got people that are assuming it's going to be a half-point increase, but the Bank of Canada seems to really love surprising us. So let's see what comes up in September. But whatever happens, just know that whether you buy today or after September or whatever it is, buy if you need to, not just because, oh, you feel like it. Like people make buying decisions for lifestyle reasons. You want to be closer to your friends. You want to be closer to your family. You want to be closer to the places you like to hang out. You want to be you want to be in a specific area for your kids' school. These are the reasons why people make moves. And those reasons don't change because there are higher interest rates or, you're worried about what's going to happen to the economy next year, because these are long-term decisions. These aren't short-term day trader decisions. So as long as you're sticking to your original commitment of wanting to make a move for, insert reason here, as long as that reason is a very strong one for you, lifestyle-wise, it's very hard to make a bad decision in this market. Knowing that if you need to sell that property in a year or so, you might not be able to, you might break even or you might not. So, nobody buys real estate with the assumption that they're going to profit on it in a year. If a situation arises where that becomes possible for you, awesome. You decide if you want to take advantage of that, which is what a lot of people did over the past 2.5 years, even 3 years. Bought, sold, bought, sold. We have a client that bought and sold 3 properties in the past 3.5 years and made money on each and every one after commissions, after land transfer tax. That's not possible right now. Can it be possible down the road? 100%. I just don't know when that down the road period is. So anyway, I'll keep this week relatively short. Hopefully, first of all, apologies for last week's terribly edited video. It was a hectic day. This one's a little bit better. I'm just going to keep trying different methods and seeing what works. Remember, if you're new here, I'm Ara Memorian, managing partner at the Spring Team. We've been doing this for 124 weeks. I'd love to hear from you. Comment below or send us an email, ara@thespringteam.ca. And I'd love to start a conversation about this stuff because there's too much broad general data and misinformation out there, and people that are pretending like they're telling you the truth, but meanwhile, they're preventing you from making really smart decisions in the marketplace right now. The sky is not falling, and long-term, you're going to end up ahead if you own Toronto real estate. And I've never been more confident in that statement than I am right now. So have a wonderful day. Thank you so much. And we'll see you out there. Adios.